Me now to talk about the commodities picture is Pritam Patnaik, who is the head of Commodities, HNI and NRI Acquisition at Axis Securities. Thank you so much, Pritam, for taking the time. I do want to eventually narrow down our conversation into gold and silver, but I want to understand how you're viewing all of the moving parts from basic commodities to crude oil. Of course, there's the OPEC meeting to look forward to. Where do we stand right now, and what are the factors that could move commodities in general?
So, Alex, just focusing on various factors, which is there, I think the Fed chairman has more or less identified the biggest problem, which is plaguing the entire commodity space, which is basically your inflationary trend, right? And the other being obviously the new variant of the COVID virus, Omicron. Now, both these things are playing a little bit of havoc as far as commodity prices go, because they do two things, right? One, they obviously kind of destroy some of the bounce back demand that we had seen post opening of the COVID pandemic. So they kind of destroy demand, but at the same time, they also create disruption in supply chain, which then kind of pushes those prices there in terms of support. So that's why you're seeing a huge amount of volatility in commodity prices. Obviously, the directly impacted commodities like gold, silver, crude, and base metal has seen a lot of action. Not so great for gold, silver, and crude. But for base metals, actually, sometimes it could also mean a little bit of support on the bottom side of it. But coming to specifically to gold and silver, if you look at it, you're absolutely right. Sometimes, the central banks were finding ways to avoid the obvious. That means to increase interest rates and to do away with this stimulus program because it's a very unpopular choice. And they kept saying that it's transitory, but it's a lot more stubborn than they estimated. Look at US, for example. Today we're looking at staring at an inflation level, which was, this is the highest in the last 31 years. It's a significant number. Even the core inflation is at about 4.5%. So you're right. Jerome Powell is going to use whatever fiscal tools that he has in his capacity to ensure that he kind of water down the entire inflationary fire which is there right now. But given the tools, there are two broad options that he has. One is he intensifies the withdrawal of the bond buying program which is there, and the other is obviously raising interest rates. I don't think he's that brave enough to increase interest rates anytime soon, but obviously they could increase or reduce the bond purchase program significantly in the near future. And that doesn't say too well for gold, right? We've seen that impacted gold prices, and I think inflation is a very, very important topic right now, so much so that despite the third variant coming, people had an opinion that the central banks will be a little more, careful and treat and not do any disruption in the market, because clearly this new COVID variant has done its own set of damages over here. But what it seems that is that this COVID will also create disruption in the supply chain that will only add to the inflationary pressure. So Colin has no other option but to start doing some activity, and that will not essay too well for gold, which is a non-interest bearing product. So you'll see some level of correction being witnessed in the case of gold and silver, both these metals. But on the long term, let's understand, while people are writing a lot about central banks increasing interest rates in a hurry, I don't think so it's going to happen, because the world is still learning to stand up post-COVID. And I think we're going to get some more time. They're going to allow the economy some more time. So while these headlines will always give an opportunity for correction for these things like gold and silver, but I think then you generally see buyers coming in at a lower level.
Okay, let's focus in. Let's zero in on gold and silver then, Pritam. You've seen like you said, you've seen a correction in the recent past, particularly over the last couple of sessions in gold prices on account of the rise in global bond yields. Particularly the bond yields in the United States. What are the levels that you're watching out for in the near term, and in the near to medium term, and how should one position themselves if they're thinking of buying gold at this juncture?
So, Alex, there are few things which really work in the markets over here. You need to know at 47,700 was a very important, support level. Gold has been trading around that level and has actually breached that level. Now, if it closes below that particular level, the next level to watch out for is 47,400 level. Now, that is a very, very significant support level technically. If that were to be breached, then 47,000 and 46,850 levels can be also witnessed. But my sense is that we could see a little bit of support coming in at 47,400. In the near terms, I would be a seller. I would watch for this level, but it depends on how it closes today. If it closes below 47,700, we would continue to maintain our short positions. I would only create a long position if it were to reach 47,400. This is on the short-term level. As far as the medium level goes, I think, like I mentioned, if we see a significant correction, any level which is around 47,000 or 46,850 will be an excellent level to enter into the gold market. That's my sense on gold.
Okay. I also want to understand how silver is going to move, because there are industrial applications more so than others, right? When you're talking about silver, so there's that aspect to consider as well. And I'm also trying to understand. I'm sure a lot of our retail viewers are also trying to understand whether there's any way to play that. Can they participate at all in silver, or is it too volatile a commodity to consider?
Given circumstance, at least you had inflationary pressure, supporting gold. But as far as silver goes today, even that support is not existing as of now. So it's going to be fairly weak, in my opinion. I think gold still has a story today, right? What the Fed does has a direct impact on gold. But you're absolutely right. Silver sometimes largely behaves like a precious metal, but in sometimes also behaves like a base metal. So the industrial use of silver is there, but it's not that significant that it can drive with prices now. And that's why you've seen that the fall in silver prices have been fairly intensive of late. As far as our view goes in silver, it's been trading close to about 61,000 levels, right? And if it were to break that level, in our opinion, which I think it could, it'll stop around 59,000 levels. And those are the levels that we would be more comfortable getting into these markets. So, and we can buy this with a target of 62,000 and 65,000 in the near future also. So, in silver also, I would suggest that we would rather wait for a correction to happen to enter the markets rather than jumping on the bandwagon now. If you were a brave trader and you were okay with putting a stop loss, you could possibly look at going short in silver prices.
Okay. Now, I'm just trying to extrapolate what you've said so far, and also try to understand, we are essentially price takers here in this market, right, in India. A lot of people do go out and buy physical gold. We are one of the largest consumers, and you've had a successful festive season. What are the data points that you've seen indicating to you in terms of that demand scenario, and how does that affect gold prices going forward?
So I think there are 2-3 things. You've seen significant growth in double-digit growth or triple-digit growth in some cases for gold demands in the country. But what it basically indicates is saying that it's a function of 2 factors. 2 things that drive gold demand in the country. One is obviously a festive demand, marriage season, and that's the season that we're seeing right now. And secondly is prices. So I think both of them work wonderfully well for physical demand for gold and silver, if you ask me today. Depressed prices, with the combination of festive period is an excellent recipe for demand on the physical market. So I think I won't be surprised that with the prices correcting, you will see a surge in demand further. People who were looking at festive buying for marriage season or for festivals, in addition to that, if the prices were to really correct, traditionally Indians have always looked at investing into gold. You could see some of the investment money also moving from, let's say, ETFs towards physical gold. Also, people wouldn't mind going and shopping at this point.
Just the final view then, Pritam, what call are you giving your clients? What are you advising them to do? What are the longer term targets that you have for gold? And you've already taken us through the near term or medium term levels. What are the longer term triggers, and what price do you see in the long term?
So what we've said is that, our sense is very simple. What we think is that some of the top headlines which could impact the pricing of gold, have more or less come through, and some of them might come through. Okay, I mean, the worst could be that in the mid of next year, you could come with the interest rate hike. The fact that the Fed has already outlined and saying that they are going to, reduce the bond purchase program is a strong enough news for gold, and gold has corrected to that extent. So our sense is that any more bad news over a period of time is going to be slightly difficult. Furthermore, the new COVID variant, if it were to intensify and problems were to be created, it would impact inflationary trend, and also basically take off some money from the riskier assets like the equity markets, and then you could see safe and when investments flowing into gold prices. So our sense is that if you get a possibility to buy, gold prices were to touch around 46,850 and 47,000 levels, those would be good levels to enter gold for a long-term target of 48,000 and 48,500 also. And if for silver, similarly, like we mentioned, anything closer to 59,000 would be a good level to enter, with a target price of 62,000 to 62,500.
Okay. Thanks so much for joining in. It certainly has been an insightful conversation, and I think our viewers will certainly have benefited from it. Pritam, thank you so much for joining in, for taking the time.
Thanks.